Good morning. Welcome back to Venture Daily. I'm Jackson Fordyce.
I'm Josiah Simons.
It's Thursday, August 28th, and on today's show, two stories. First, Treasury Secretary Scott Bessent says that AI is about to take off and that the Fed should be paying attention to that.
And second, earlier in the week, a top Trump advisor says that the U.S. government plans on taking more stakes in companies.
All right, for our first story today, Treasury Secretary Scott Bessent says the AI boom is about to show up in America's economic productivity numbers as soon as Q1 of 2026.
That prediction puts pressure on the Federal Reserve, which Bessent argues isn't paying enough attention to the potential of AI. He compared it to the Fed's embrace of the internet's disruption back in the 1990s.
Bessent told Fox Business Wednesday morning that Fed policymakers from the board down to the regional bank president should keep an open mind. His argument, AI isn't just hype, it's about to be a measurable force in the real economy. And here's a clip from that. Actually, we have to click over.
Yeah. And I think there's a very good chance with this AI boom that we're seeing, we're going to see the productivity kick in as soon as the first quarter of next year. So I think everyone who's setting policy at the Fed, whether it's the board, the regional bank presidents, the staff, should have a bit of an open mind here.
All right, thank you, Scott. The Trump administration has already gone all in on AI, and that enthusiasm is bleeding into its economic playbook. Lowering interest rates has become a central priority, and if AI drives productivity higher, that gives the Fed more room to cut without fueling inflation.
Still not everyone's convinced. Recent research has questioned whether companies are actually seeing meaningful gains from their early AI experiments.
The big question now, do those numbers actually materialize? If they do, it reshapes the Fed's calculus. If they don't, the administration could be left pushing rate cuts without the data to back it up.
Yep, and for more on the story, I called Matt Watson.
Yeah, thank you so much for having me. Matt Watson. I'm with Origin. I'm the founder and CEO there. We are an AI wealth management product. So we help the mass market deal with the very sticky topic of money and making it work for them.
Yeah, and for my first question for Matt, I asked, Treasury Secretary Scott Bessent says AI will start juicing productivity as early as Q1 of 2026 and that the Fed should start factoring that in today. Is that optimism grounded in data or political pressure?
Yeah, I mean, I think the Trump administration's been pretty clear that one of their big goals here is to lower borrowing costs across the board for both the country and also individuals. So right now, I think we're seeing a pretty widespread set of tactics here to try to push rates down. So that includes things like changing, folks who are at the Fed, trying to make more aggressive comments around their independence and what they should be doing and why. And I think trying to find any justification for why rates should be lower. That's just one of them. I think right now, as you look at the data, it's probably not bearing out quite yet. I think that AI adoption, obviously, in San Francisco with new technology companies has been significant, tremendous amounts of investment in those products. We believe in them tremendously. I think they're going to change the way that we operate, undoubtedly. I don't know that they've found their way into the day-to-day workflows of some really big companies quite yet, where they're going to have any sort of measurable impact on productivity. And of course, if they did have that measurable impact on productivity, that would be deflationary in nature, and that'd be a really good reason why the Fed might want to start looking at cutting rates. But I don't think we're going to see that next quarter or the quarter after that, maybe a couple of years down the road.
I also asked Matt, Bessent is basically placing a bet that AI-driven productivity shows up in the economic data next year, but a lot of recent research says those gains aren't here yet. And I asked Matt, what's your read here?
Yeah, I agree with that. I don't think the gains are here yet. There was an MIT study that came out last week or the week prior, and effectively what it said was 95% of the AI implementations so far have not worked out. If you kind of peel the layers back, I think a lot of that is implementation and usage of these tools. And I think that that's the type of thing that does take, that takes time to permeate through the economy. So if people don't know how to use the tools effectively, it's going to take time for those results to deliver. But that's not going to happen overnight. Really big companies with really broad workforces, it's going to take time for them to adopt these tools and utilize them effectively. And I think it's what you're seeing, and the dispersion between the utilization and the effectiveness of these tools is really like capitalism on the coast. Like, people are highly incentivized at startups to make these tools work so that they can do really well and build big impactful companies. And then I think at the really big, like Fortune 500 companies, it's almost like centralized planning, where there's not as many animal spirits at play to make these things work and for them to be as effective. So really, long story short, it's going to take time for these tools to deliver the fruit that the Trump administration is talking about.
Okay, so digging a little deeper into this MIT report, I asked chat to give me a summary.
Okay.
This is the main reason that the that 95% number exists. So it's talking about a high failure rate. The study titled The Gen AI Divide, State of AI in Business 2025 found that 95% of generative AI pilots fail to deliver measurable business impact or ROI. Only about 5% show rapid revenue growth. So I think what's happening here is big corporations are trying to integrate an AI copilot like ChatGPT or Copilot from Microsoft or Gemini into their workflow.
Yes.
So that they can speed things up, and they're like, hey, we hear about this AI buzz, we want to use it.
Yeah.
95% of them are not finding success in return on investment. And the key reason, according to chat, is a learning gap. So failures are less about the AI tech itself, more due to this learning gap where these tools don't adapt well to the enterprise workflows unless specifically tailored and integrated.
Because like it's too complicated what's going on within those big companies?
Probably,
maybe?
and ChatGPT is much more of like a common problem solver. It's not trained on their data, it's not trained on their workflow. So it's just going to give like probably too simple and straightforward of fixes that just don't quite work for what they're actually looking for. So generic tools like ChatGPT work individually, but often stall inside corporate environments.
Okay, cool. Makes sense.
Yeah, so I think startups are like adopting this well, and they're using AI to their advantage in a lot of ways, and we're seeing that all across Twitter, X. We see people talking about how much their workflow has just been absolutely accelerated by AI. So I think it absolutely does work. It just is not working on the corporate level yet.
Okay, got it. That makes sense. My last question for Matt. If AI really does supercharge productivity, that changes everything, rates, growth, and inflation policy, what would a Fed playbook actually look like in a high productivity, low inflation world?
Oh, man. Tough question, right? Because I think let's just go through it. So if AI really works, you've got a tremendous amount of deflation. The cost of services get a lot lower. Unemployment goes much, much higher, right? Because you don't need as many people to run these companies. And Fed policy becomes much, much more complicated at that point. And that's where you get into more of this centralized planning around universal basic income. The counter to that point is that every time there's been this step function change in technology throughout human history, we find a way to be productive again in some other way. And so I think that there'll probably be an initial transition period that might be a little bit more difficult. And then I think if you believe in kind of human evolution and the way that we've utilized new tools as they're developed, while many of them may be very intimidating and scary, there's always productivity gains, and people have always utilized them to have really strong economic backdrop. So I guess really long-winded way of saying you'll probably have a bumpy period. Current Fed tools may not be as effective, but overall I think we'll be just fine.
So that is similar to what we talked about in the show before. What he said there at the end is like that just because an industry might be totally disrupted by a new technology, like the car coming in, disrupting the horse and buggy and
Carriage industry.
A lot of people lost their jobs.
Yep.
And yet way more jobs were created by this new technology.
Yep.
Now, we all can speak on that with AI. Like, of course, we can think that. But I want to push back a little bit on what he said in that I don't even think this is necessarily a human spirit thing. I think this is more of like, if you are a thoughtful business owner, leader, you're going to need to see the ways in which you can implement AI and save your company money, do your work more efficiently. But I think the companies who replace all their workers with AI and think, oh, this is going to make us way better, are going to fall behind in the long run to the companies who are doing it right, which is doing both, keeping AI and also hiring more. We did a study, we talked about a study last week, a Mercury study, that basically said, in the short term, right now, companies who are adopting AI are actually hiring more than companies who are not. And it makes sense because their work is much more efficient. They're probably making more money. And because of that, they can hire more and grow more.
Right.
I think that the best companies will adopt AI and at the same time be hiring more than the companies who are just saying, oh my gosh, this is going to save us so much money on our bottom line. Let's just replace all our workers.
So what do you say to teams or companies that are laying off specific teams because AI has really taken that part of the company? So say, for example, editing, right? Say AI editing gets so good that you don't need an editor anymore for your company.
So I think it's actually a good thing. I'm not saying that people losing their jobs is a good thing, but those teams do have to go. You have to have this technology.
You got to get out of here.
Something. It has to replace something. But the best companies, I think, are going to say, we're adopting the new car, we're leaving the horse and buggy. So that team that is working on something that we can have AI do, we're going to do. But we're going to bring on new people to do stuff that the AI can't do.
Right.
And I think that will be like, that will bear itself out over time.
Yeah, exactly. Thank you to Matt Watson for joining the show today. All right, next on the docket, the U.S. government taking stakes in U.S. companies.
Yeah, that's pretty interesting. That's right. The U.S. government is signaling it could start taking ownership stakes in more companies, just as it did with Intel when I think Trump took 10% of the company. The U.S. government now owns 10% of Intel, which is kind of the first of its kind, with a long-term goal of building a sovereign wealth fund.
Yeah, that's according to National Economic Council Director Kevin Hassett, who said Monday that the Intel deal should be seen as a down payment on something President Trump's wanted since the campaign. A U.S.-owned sovereign wealth fund. Here's a clip of that, actually, of him talking about that.
Okay, so we should expect the U.S. government to be taking more equity stakes in businesses around the country. That is something that if you're a CEO this morning watching us, you should say, okay, the sovereign wealth fund may be coming and trying to effectively buy in some kind of equity stake.
It's possible, yeah, that's absolutely right. That if in the past the federal government has been giving money away lickety-split to companies, and the taxpayers have received nothing in return. And so now what's happening with the Intel deal is the CHIPS Act money is going out as planned, but instead of it just going out and disappearing into the ether, the U.S. taxpayers are getting a little bit of equity. I can really not see how anyone would think that's a bad thing, unless you thought that the government was then going to go in and run the company. But these are going to be shares that don't have voting rights. The government's going to stay out of it.
That's interesting. Kevin there sounds like he's got the same thing I got. Sounds like he's suffering from a little bit of a cold.
Oh, not feeling too well.
Yeah, I think COVID
is a little nasally right now.
He's a little nasally. COVID is it's destroying
so
Austin and the whole Austin area. I don't know if it's destroying the whole country right now.
I think it's everybody.
Everybody and their mother has COVID right now. I just had COVID. I just came back from it. So.
Yeah. Well, Josiah's quadruple vaxxed, so.
And as you can see, we didn't make any content in the last 3 days. So Jackson, when I'm gone, when
I could because
the cat's away, the mice will
not play.
Be lazy. Quick catch up. Last week, the government announced it would take nearly a 10% position in Intel in exchange for the billions in grants already awarded to the chip maker under industrial policy programs.
Yeah, President Trump himself defended the Intel investment on Truth Social, posting, "I paid $0 for Intel. It is worth approximately $11 billion. All goes to the USA." Why are stupid people unhappy with that?
That reads very similar to the Barstool Dave Portnoy buying his company back for $1.
Yeah, exactly.
It's like the exact same thing.
He took a page out of Dave's playbook.
Yeah, he really did. For now, officials are downplaying the idea that Washington could use its new stake in Intel to push other companies into partnerships. But it leaves open the bigger question, which is how far is the U.S. willing to go in blending industrial policy with actual corporate ownership?
So for more on the story, I brought back the man himself, and he's out of town this week.
Okay,
so you can.
Where is town for him?
I think he's in
New York.
No, he's based in SF, but
he's based in SF. Okay,
one of our really good friends. He's in Bogota, Colombia,
capital.
Let's. I think he talks about it here.
I'm Ben Narasin. I'm the founder and general partner of Tenacity Venture Capital. Before that, I was a seed and traditional VC investor for about 15 years. Before that, I was a founder for about 25 years. Took a company public in that endeavor. Right now, I'm in Bogota, Colombia for Tech Week as we start to expand our exposure to LATAM a little bit. We do seed investing in North America and LATAM, and my LATAM companies have really been impressive. So I'd like to learn about more.
Is he Latino?
I think he might be. He's got a little something.
Yeah, actually might. For my first question.
And you can say that.
And I can say that because I'm Latino.
I thought you were Hispanic.
Well, that's the same thing for the most part.
Oh, my bad. Excuse me.
Hispanics or any Spanish-speaking countries.
I see.
Latin is any Central and South American. So if you're from Spain, you're Hispanic, but you're not Latino.
I see.
If you're Brazilian, you're Latino, but not Hispanic.
My wife, you're 50% Mexican. My wife's 50% Mexican.
Right.
But whenever I say that, when I say you're Mexican, she's like, I'm Hispanic.
No, but she's Hispanic, Latina, and she's Hispanic. She's all three.
I thought it was Latinx.
My first question for Ben Narasin. The U.S. government now owns almost 10% of Intel, and some officials are calling it a down payment on a sovereign wealth fund. Is this the start of a new American industrial model or just election year optics?
Oh, I think it's more that, if I'm reading it correctly, Trump basically converted a gift/loan/grant into equity. So everybody knows he hates everything Biden did and will try to unwind it. So I'm sure that part of that discussion with the CEO was, hey, man, we already gave you $2 billion. Biden told you we'd give you another 6. Give is the wrong word. We'll trade. We'll get the money to you. You get the stock to us. So, look, it's not unprecedented, right? The U.S. has taken stakes in car companies and, mortgage lenders and others. But it matches Trump's profile as a I love to do a deal kind of guy. And look, I don't feel any issue with the fact that we're turning, hard-earned American U.S. taxpayer dollars into equity instead of just a bailout or, infusion of cash. The bottom line is, if $8 billion is going in purely to create jobs and there's no other way to do it, fine. The reality is now we're getting $8 billion in to create jobs and we get equity for the benefit of the taxpayers. Some of our investments in the past during the great financial crisis ended up doing a really good job for the American people. So maybe it'll happen again.
That's cool.
Sounds pretty excited about it.
Yeah, I mean, and I think I said earlier in the show,
it's unprecedented.
I didn't say
first of its kind.
unprecedented.
Sorry,
I said first of its kind.
Yes.
Which I'm
Ben
sure
just
there's
debunked you there.
I'm sure there's something about this deal that was first of its kind.
First
that
ever
I can pretend
chip
like,
maker that the U.S. has invested in.
Yeah. But it does sound like this has been done before.
Yeah.
This isn't
not
just
that,
it's an unprecedented.
Yeah, it's not that big of a deal. It's exciting, but it's not like out of the ordinary for the U.S. government to do this.
Yeah, my Reddit feed wants to tell me that this is like Hitler.
Sure.
Basically.
How so?
That he's like this is National Socialist Party kind of first moves.
I get into a question like that. Not that serious, but I asked a question similar to that. I think it's my next one, perhaps, maybe, or I think it's the third
perhaps.
I think it's my third one. All right, for my next question for Ben, sovereign wealth funds are usually funded by oil, minerals, and exports, but America is being jump-started through tech grants. Can that model scale? What would it actually take to build a sovereign wealth fund here in the United States?
Yeah, that's going to be tough. I mean, I know Trump likes to call it a sovereign wealth fund, but as you pointed out, like you look at sovereign wealth, it comes from natural resources. And while there's many claims that the natural resources of America are worth a tremendous amount, unless you're going to start selling off parkland, I guess in theory you could take dollars created from drilling rights or airwave frequencies or other things that the government controls and sells and funnel those into investment. The biggest challenge is not, can we get the capital? There's capital to be gotten from somewhere. It's we have the expertise to manage it and the people to do it right to get a material return, appropriately risk reward adjusted. And that's a big question. I don't know. People that do this for a living tend to like what they're doing.
My final question for Ben. Critics say this opens the door to political favoritism and corporate dependency, while supporters say it's how you build national champions. Long term, who's right?
Well, look, I mean, I think Trump's a pay-to-play guy, period. So it doesn't matter whether you give him a plane or donate to his library or take an investment from him. The people that have influence with Trump are the people that are financially connected to Trump. So, whether that survives after his administration or not sort of depending on who comes in. But I think that, look, my father used to work for IBM. He worked there his whole life. And he used to complain bitterly about how the U.S. government would constantly attack and try to break up IBM, where the direct competitors, the Japanese, would constantly be supported by their government. I love the idea of our government actually supporting our industry. It's a fiercely competitive world. Business is war, and a lot of our warriors in the corporate sense are stymied by the regulation and controls that are put on them. And we're sort of going in the opposite direction right now, it sounds like. So look, Japan, China, Europe, they got no issue supporting their industry. So I don't see anything wrong with us supporting ours.
I thought it was interesting how Ben brought up that most of, if not all of Trump's relationships are business relationships, financial relationships. And it makes me, something comes to mind, a certain New York financier.
Jeff.
Yeah, Jeff.
Okay.
Yeah.
What about Jeff?
Just The alleged relationship that they may have, financial
Sure,
relationship.
the financial warrior, Jeff. You know, there's warriors in the business sense, like Jeff Bezos, Elon Musk, you know, Tim Cook, Jeff.
But not. But it makes it sound like you're making fun of the warrior thing to the extent of saying Jeffrey Epstein is one of the warriors.
He's maybe the most well-known New York financier of all time.
Yeah, probably.
All right. Thank you to Ben Narasin for being on the show today.
That's it for Venture Daily. Thank you guys for listening. If you liked the show today, hit the like button and please subscribe to the channel. We're doing this every single week. And if you like tech news, if you like venture capital, startup talk, subscribe.
Yeah, and thank you to Content Stack for letting us film here every single day in Austin, Texas. If you like today's show, whether you're on YouTube, Spotify, Apple Podcast, or X, throw us a like, comment, and a review. Give us a 5-star rating if you think we earned it. And as always, we will see you here tomorrow morning at Venture Daily.